The curious case of Gofer mining, a seemingly bizarre mining enterprise, exposes a significant vulnerability within the UX company's house, highlighting the potential for widespread fraud. A closer examination reveals a company that has neglected to file accounts for several years, a glaring red flag indicating potential irregularities. Adding to the intrigue, one of its directors is listed as the Duke of Commonwealth, a title that immediately raises suspicions. Further investigation unveils an even more astonishing revelation. This same director has ostensibly declared his own sovereign nation, complete with its own central bank, Supreme Court, and a surprisingly extensive list of purported associates. This self-proclaimed country, mirroring the structures of legitimate nations, boasts its own currency, the Commonwealth pound, and a leader with an equally elaborate lineage. The website claims His Highness, the Duke of Commonwealth, is a descendant of both Greek royalty and a Russian prince, further adding to the fantastical narrative. The audacity extends to a claim of having personally donated a staggering £292 billion in assets to the public, a figure that strains credulity to its breaking point. This elaborate fabrication extends beyond the website, reaching into mainstream media. The perpetrators of this audacious scheme even managed to secure an advertisement in the Times newspaper, falsely asserting that Gofer Mining was established by Barclays Bank and would be investing a substantial £250 million in mining operations. This deceptive advertisement served to lend an air of legitimacy to the fraudulent enterprise, potentially misleading investors and the public. The Observer has uncovered evidence that, as early as 2019, the British-Ukrainian Chamber of Commerce alerted Companies House to Gofer Mining's suspicious activities in Ukraine, highlighting the prolonged nature of this deception and the apparent inaction that followed. The lack of swift response underscores a critical weakness in the system designed to regulate corporate transparency. The irregularities within Gofer Mining's documentation are profound, prompting concern among experts in corporate governance and financial regulation. Dan Needle, a former senior tax lawyer and founder of the Tax Policy Associates think tank, who has been extensively investigating the prevalence of fake companies and falsified accounts registered with Companies House, described Gofer Mining's accounts as on another level, implying a sophistication and scale of deception that warrants serious attention. He emphasizes the need for enhanced regulatory oversight to prevent similar instances of fraudulent activities. The deceptive practices of Gofer Mining did not go unnoticed by regulatory bodies. In 2023, the Financial Conduct Authority, FCA, issued a warning regarding Gofer Mining, stating that the company might be offering financial services or products without proper authorization, targeting individuals within the UK. This official warning further solidifies the seriousness of the situation and highlights the potential harm inflicted upon unsuspecting. When contacted by the Observer, the individuals behind Gofer Mining presented a rather surprising defense, claiming to be victims, not attackers, and further asserting that they had initiated legal action at the European Court of Human Rights. This counter-narrative only adds another layer of complexity to this already convoluted situation, highlighting the lengths to which those involved will go to maintain a veneer of legitimacy. The claim of victimhood appears at odds with the evidence of fraudulent activities and deceptive advertising. The website of this fictitious enterprise showcases an alarming list of associates, including several current and former parliamentarians. Among these individuals is former Chancellor Nadhim Zahawi, who responded to inquiries by stating he had zero knowledge of Gofer Mining's activities and intended to inform the authorities and my lawyers. This statement raises further questions about the extent of due diligence and the safeguards in place to prevent high-profile individuals from being inadvertently associated with fraudulent enterprises. The inclusion of prominent figures inadvertently lends a degree of credibility, highlighting a loophole in the system that needs to be addressed to prevent future exploitation. The sheer scale of the deception, involving false documentation, misleading advertising, and the alleged involvement of current and former officials, demands a thorough investigation into the processes and oversight within Companies House to prevent future instances of such audacious fraud. The case of Gofer mining serves as a stark reminder of the need for stronger regulatory frameworks and more robust verification procedures to safeguard the integrity of the UX corporate register and protect the public from fraudulent activities.